Have you ever thought about becoming an investor? I don't know about you all, but that was something that I've always wanted to do. Even though I'm a corporate employee, I've always wanted to put my hands on other things, grow things passively. What if I told you that you can become an investor using a vehicle to use your money to invest in something to help grow you money passively, but the money that you use to make that investment continues to grow at the same time while your investment grows? That's what I'm going to talk about today. How you can become an investor with cash value insurance. Let's get into it. I'm Lonzie Greene, affectionately known as Mr. Flip Your 401k. I help people build holistic financial strategies using their retirement plan, their cash value life insurance to pay off debt, become investors, get paid for life, and retire comfortably. Welcome to From 401k to Freedom. So, why is cash value insurance such a unique investment tool? I'm going to tell you. And then I'm also going to show you or tell you how I use my whole life policy to become a real estate investor for the first time. But let's talk about 3 reasons why it's such a unique tool. 1, taxes. Because when you put your money in a cash value life insurance policy, the money that you're putting in there has already been taxed. So anything that you now have in that policy that's growing for you grows tax-free. Tax advantage, meaning you don't have to pay taxes on it whenever you try to pull the money out, whether it's for a withdrawal or whether it's for a loan. Then the liquidity. When you begin to fund a whole life insurance policy, you can take that money out, meaning you can begin borrowing from it as early as 30 days. So it is almost as liquid as checking or savings account. I actually call it a savings account on steroids because of the flexibility. And then finally, guaranteed growth. What do I mean by that? I mean that the money that you have in your cash value life insurance policy, your whole life policy, grows guaranteed. It's fixed. So for example, my policy grows at a 4% rate of interest and then it receives dividends as well. So let's just say 5% for the sake of this conversation. And I get that 5% on my money each and every year. So my money is always compounding each and every year. I never have to lose sleep thinking about whether my money is going to go up and down. So guaranteed growth is another reason that makes using the vehicle of cash value life insurance so unique. Let me talk about how I use my policy to become a real estate investor for the first time. For me, what makes cash value so different and what made it so appealing to me to become an investor is because it doesn't have the same restrictions or limitations as a 401k or IRA. For example, with the 401k, there are certain restrictions like when you can take the money out, for how long, what amount you can take it for. With the 401k, you can only take out $50,000 max within a 12-month time frame. Then on top of that, if you don't pay the 401k loan back, if you decide to borrow from the 401k, anything that you have outstanding on that loan is going to be taxed and, depending on your age, penalized, taxed at least 20%, if not more, depending on the tax rate that you're in, and then an additional 10% based on your age. And the same for the IRA. If you have a traditional IRA, you pull money from the traditional IRA, it's going to be taxed as well. Cash value life insurance, you're not taxed. So that was what was appealing to me. Here's what I did. I basically took money that I at one time was funding with my 403b. And what I mean by that is I was overfunding. My company was doing a 6% match. I was doing 15% in my 403b. So I lowered that to 6%. And then I took the extra 9 and started putting that along with other money in my whole life policy. When I did that, I came across a multifamily investment opportunity up in a different state than where I reside. And the way in which that worked was I lended money to an investor, and that investor purchased the multifamily property. So they took a hard money loan from me and they paid me back monthly interest of 20% of the amount that I provided them. I had the money in my cash value. I borrowed from the policy. I gave it to the investor. So my money that I borrowed is still growing at a 4 or 5% rate of interest, as though I never borrowed from it at all. And then the money that I put into the real estate was growing at a rate of 20% interest. So I was making the 5% interest on the money that I borrowed, as well as the 20% on the real estate deal. I actually multiplied my dollar several different times by that activity. If I had took that money from a checking or savings account, that money would be gone. It would not be growing anymore because now you're taking it out of the account. With the cash value life insurance policy, you don't have to worry about that. Your money still grows in that policy and it's still growing in the investment. So now I take the interest that I'm receiving off the real estate deal. I am putting that back into my cash value life insurance policy. And when I receive the principal back from the investment, which I will be receiving actually by the time this video is recorded very soon, I'm putting the principal amount as well. So I paid the loan off. I paid extra money back into my policy because of the interest, and my money never stopped growing from the real estate investment. And hey, man, I don't know about you all, but to me, that is life-changing from a financial strategy perspective. So if you are open to see how you can invest using cash value, or if you want to see how you can use it to pay off your debt, either way, click the link, get the book, The Value of Cash Value, specifically for corporate employees who are looking to get paid for life, become their own bank, and retire comfortably. And even if you're not a corporate employee, you're more than welcome to book a one-on-one call with me so I can walk you through how you can become an investor using cash value life insurance. But until then, that concludes another episode. Y'all take care. See you soon.